Hello, friends. How are you? Welcome to Vision to Victory podcast, Vision to Victory Networks, V2V podcast. In this podcast, what we do is that we meet, talk to the most elegant people, the most elegant founders who are changing the startup diaspora. I am your friend Rahul Malhotra. So, Peter, welcome.
Thank you. Thanks for having me.
How are you doing, Peter?
Today, very well.
Very
Yeah,
nice.
I'm looking forward to this conversation.
So, Peter, I know you very well, and I have spoken to you many times, and I always find you full of energy, and you are so exuberant in whatever task you do. Where do you find your energy from, Peter, my friend?
Well, I'm. Yeah, I wake up every morning, and it's a brand new day. Lots of things to do, and yeah, what I'm building here is excites me every day.
Wow,
For challenging days, days that go really well, but. I guess that's where I get my energy from, and then the successes. When you make these two steps forward in your successes, yeah, that's rewarding.
wonderful.
So, yeah.
Wonderful. Peter, I want to understand, Peter, uh, who is Peter? What's Peter's background? What is Peter's journey as a person so far? Where do you belong to? From where you have come? How your life has evolved? And up to this point, why don't you just give us a lovely glimpse about you, Peter, as a person?
Sure. So let me start with please continue to call me Peter. Actually, my first name is Peter Paul, Peter
Peter,
hyphen Paul,
okay,
which is originally I'm from the Netherlands, which is quite common there.
right,
But continue to call me Peter. I'll listen to that. So yeah, just a little bit about myself. So I'm originally from the Netherlands. You probably hear my accent. I grew up there, and after university, I started in the big world of banking.
wow,
So I worked for a large, excuse me, a large Dutch bank at that time, global bank, did all sorts of different things from consumer banking to transaction banking. I worked at the head office in Amsterdam. So I did it for about 8, 9 years, and then I sort of got itchy, and I thought, I like finance, banking,
right.
finance and investing, but the big corporation, big corporate world, perhaps it's time to go down the entrepreneurial path. Now that coincided with moving to Canada with my wife, who's originally British. So we thought, why don't we go somewhere
Right.
neutral
Okay.
for both of us?
That's good one.
And Canada is a nice
Right,
place
right,
to go. So that's what happened. So we moved to Canada in 2010,
right.
landed in Vancouver, and I basically started a whole new, I'd say, book. And so started working with small companies and helping them to get ready to raise capital. And that was the time that I sort of experienced with these companies how challenging it is to raise capital, how we're not using technology to
Right.
do that, and connect companies with investors. Now that's where the Frontfundr story started. So let me
Understood.
pause here, but that's in a nutshell the, the path so far.
Wonderful. Such a lovely journey. Peter, when you started Frontfundr, okay, I would like to know, how did you start this? How did this idea came? You have briefly told me that you were trying to solve this solution in the startup, this problem in the, you were trying to provide this solution for the problem in the startup ecosystem. Pardon me. So when you were doing this, uh, how did you evolve your company, Frontfundr, which currently is into? Tell me in a nutshell the journey so far.
Sure. Yeah. So it actually started a couple of years after I moved to Canada. So that was in Vancouver. We're in Toronto now. Moved here about 5 years ago. But so when I start working with these companies and did that for a while, and this was typically on a sort of consultancy base, help them get ready to raise capital. It occurred to me like, hey, what if we leverage technology and connect companies with investors? And if you use technology, you go online, you can actually reach out, of course, to the public. And at the
Right.
same time, so this is not something that I necessarily invented. At the same time, I saw what was happening in the UK. That's where actually investment crowdfunding
Wow.
started about 5 years earlier, so actually around 2008, 2010. And so I was following it. I thought that makes a lot of sense. That excited me because I thought, hey, we're leveraging technology. We help companies to tap an entirely new pool of capital, investors they have never dreamt of, so far beyond the usual suspects like angel investors, VCs. Anyone is basically a potential investor now in a startup. So I like that idea. It made a lot of sense to me. And so, but then of course, there are lots of pieces of the puzzle to put together, and
Right.
nobody had sort of a blueprint really on how to
Right.
do that, particularly in Canada, which of course, if you are in the funding investment space and you take investments and pass them on to investors, you're basically in the business of trading securities. So it's a strongly, heavily regulated environment. So I think it's fair to say that when I decide like, hey, this makes sense, this is exciting, engaged with the securities regulators. This was back in British Columbia, and really started a conversation like, hey, this is what I want to do. I think this makes a lot of sense. This helps companies raise capital, which is so much needed for startups to grow and succeed. But I need guidance. How do I do this? And so that's really the conversation with the regulators. Took about a year and a half, 2 years, and we were the first platform actually get a sort of approval and no objection from the regulators to start and do the entire support the entire funding investment process online. So this was about around 2015, and then we launched the first beta version in 2016. So in summary, once I thought, hey, this makes sense. This is about opening it up. Now actually the retail investors can now also sort of have a seat at the venture capital table
Right.
at the very beginning,
Right.
and so that's kind of where the story started.
Wonderful. So that means what I understand is that you've created a marketplace where on one side you have got the founders, you have got the startup, you have got the entrepreneurs who can have a company on your ecosystem, on your website, in your platform. And on the other hand, you have got small investors, the retail investors, and the customers who can invest in these companies. What a wonderful idea! So, how many companies so far since your journey you have helped to raise funds, and which was the most exciting? Maybe top three companies which you helped. Can you
Yeah,
just
sure. And so the whole idea, as you just said, of opening it up for retail investors. So
right?
think about it is that anyone can invest through Frontfundr for as little as a couple of $100, and you
Okay,
become a co-owner in the company.
right.
So we've seen investments from a couple of $100 to half a million or more. So it's an inclusive marketplace. You're right.
Right.
It is indeed a curated marketplace. So we screen all the deals, all the companies before they come on the platform. But the whole idea is that it's opened up, it's democratized, it's accessible to
Correct.
all investors.
Correct.
Now, a couple of highlights on exciting raises we've done. Of course, we've so far, to date, we've done over 175 successful capital raises on
Wow,
Frontfundr.
that's
Raised,
good.
yeah, so we raised
Excellent.
over 200 million through the platform, and a few notable deals. We had a recent company called Blossom Social. They raised earlier this year, and they're kind of they're Reddit for investing, and they also had already a large community. We have now a community of nearly 50,000 investors.
Amazing.
So
Amazing.
we of course promote this to our community. Blossom tapped their community, and we jointly tapped new communities. And so they raised in a record time over $750,000 from around 800, 900 investors. This was in the first 24 hours. And so they actually closed the campaign within 10 days.
Wow.
So that's a great
Super.
success. It's a great example of it's accessible for everyone. They literally were going after their own users, so customers
Wow.
that were now turned into investors.
How amazing.
So another example is we funded a ski resort in BC,
Right.
and that was exciting because there's a little bit of a story there that they raised on Frontfundr, and the cool thing is, Raul, that you can of course add perks to an investment. So if you have a CPG product, you can attach the actual beverages or whatever. Say, hey, you invest X amount, and you get a 6-pack of the kombucha or whatever it is,
Wow.
so the ski resort said, well, invest X amount and you get ski tickets. You get invest,
Amazing.
a large amount, you get a season ticket for the
Super.
family. Another one, you get a pair of design skis. So I invested myself in that one through Frontfundr, and so that was a great success. And yeah, it was fun because I actually went there to enjoy my perks. And I was on the ski lift, and I had this conversation with the person next to me. He said, "Hey," and he was talking to me. He said, "Hey, this is cool." And he told me, he said, "You can actually invest in this ski resort." I said, "That's interesting. How does that work?" Because of course I wanted to hear him out. But he
Right.
said, "Yeah, you go online on this platform. It's all pretty intuitive." And anyway, at the end of the ride, I said, "I must confess that I know Frontfundr very well." But it was great to hear his experience, right? So yeah, that's another example. And we've done a lot of deals, and it's exciting to open it up, and to really redefine the traditional separation between
Right.
companies have their customers, they have their investors. Usually nothing to do with each other. We say, well, not necessarily. We're redefining that.
Amazing, Peter. You are doing something so awesome, so super. I'm super
Thanks.
excited. Please take me as an investor in your platform. I am going to
My
invest something
pleasure.
today. One. Second, if I become an investor in your platform, tell me how it is better than. I'm talking like an investor. How it is better than other asset classes. Like
Mm,
today, I have an option.
mm,
Okay, I can invest in direct equity markets, direct capital markets. Oh, I can open an FD, much secure fixed deposits. I can get into a mutual fund, okay, or any other investments via private equity. Um, Tell me how, or I can invest in gold,
mm.
right? Tell me how your investment in you or investing via your platform is better than buying a property, investing in real estate, or investing in gold, investing in maybe opening a fixed deposit, or investing in mutual funds, or direct capital market and equity market investment. How are you better placed? How is my money if I put tomorrow $10,000? How do I get better returns on my money if I invest in your platform?
Who cares about gold? Why not everything in startups,
Right.
right? So now to answer this question seriously, the best way to answer
Yeah,
is of course that as the basics of investing is diversifying your
of course.
investment across multiple asset classes.
Right.
Now, traditionally, the regular investor, and not just retail investors, but also larger accredited investors, you know, haven't had really access to investing in startups. Perhaps you are a part of an angel investor community, and yes, then you get certain, in your community, perhaps deals presented that you can participate. But the average investor, really, where do you go for these kind of deals, right? So if you want to diversify your portfolio, and of course, most investors are already active in the public markets directly through funds, electronically trading funds, etc. But but if you want to diversify, why wouldn't you add private markets, private market investments, which
Right.
which is a different asset class to real estate, to gold, to public markets. But the private markets, historically perform better than public markets in a return that's on average about 12.4%
Oh,
higher
is
than the
it so?
public markets. So that doesn't mean, okay, put everything in the private markets, because again, back to the portfolio approach. But
Right.
generally, most, let's say, investment experts agree, like, well, putting about 10% of your total portfolio in the private markets
Right.
makes a lot of sense.
Right.
So we're basically unlocking the private markets asset class to the regular investor. And think about this: here in Canada, already about 13 million Canadians are on direct investing apps in the public markets,
Right.
or they direct invest through their bank, or through an advisor, or these online apps. So why are these over 13 million people not able to invest in the private markets and add that, unlock that as an asset class in their portfolio? That's basically what we're doing. And so Frontfundr supports, from early stage pre-seed, like early startups, to later stage private companies. Yeah, and so we're actually now moving on to really later stage, all the way to Series A and beyond. That's what we're now building up. So it's all about making the private markets as an alternative asset class, very welcome in a general, let's say, investment portfolio. Make it accessible to the regular investors.
Very thoughtful. Excellent. Very thoughtful. So, Peter, I have discussed with you about your journey, Peter as a person, Peter as the person who started Frontfundr, and you have shared with me how this asset class, a new asset class you have created. Tell me, what are the problems which you have faced while in this journey of launching Frontfundr from 2016 up to so far? It's an 8-year-old journey. What were the problems did you face? What were the challenges did you face? And looking at you, I know that every challenge you are going to knock off. Like, so how did you face those challenges and eliminated those doubts and overcome all that, and now you are at a stage where front funder is getting to the next level. So I want to understand top 3 4 challenges which you faced, and how did you overcome those challenges.
It's a great question because it actually reminds me of the early days. This is when I was back based in Vancouver and I was exploring this idea.
Yeah.
And remember, I was myself fairly new in Canada, actually.
Right.
This was for a couple of years. So I sort of got a bit of a lay of the land, but it was still early days for me too. So I remember having these conversations with traditional investors in this space.
Right.
I said, well, what if I build this platform? And they kind of smiled at me and said, kind of a good luck with that, and why? Because it's obviously, well, building a company in general is challenging, but building something new where you have to put these different pieces to the puzzle, technology, regulation, put that all together is not an easy task, right? So I would say the challenge, one of the challenges was indeed, you know, removing the boundaries, the regulatory boundaries to actually do this. And that took me a lot of time, right? So to get the regulators'
Right.
comfort here, and in
Right.
Canada, and I sometimes say we're blessed with 13 securities regulators. We
Okay.
blessed. We
Right.
don't have an SEC. We don't have a national regulator,
Right.
right? So that made it particularly challenging. So that was definitely a challenge. Um, and then launching the platform obviously is a great celebration. Really, it's
Right.
launching with the first 3 deals, and then having the same people that sort of kind of looked at me like good luck with that at the launch party. Some of them actually also became investors in Frontfundr itself
Oh.
because we've been drinking our own whiskey and raised through our own platform.
Okay.
Frontfundr multiple
Right.
times.
Right.
So anyway, the second challenge was really, if you do something, it's already challenging again to build a company, but if you also sort of have to build the market, create awareness, education around investment crowdfunding, like explain to companies, that yes, you can actually raise from anybody you want. You can raise from your customers. How does that work? And to investors, well, you can invest in startups. No, I'm not really an angel. I can't do that. Yes, you can. So the whole and explaining how that all works, that took a lot of time. So you also have to sort of build the market. That was definitely a challenge. And then, of course, the third one I'd say, and you mentioned it earlier, we're a marketplace, a curated
Right.
marketplace.
Right.
With a marketplace, it's always kind of a chicken and egg thing. What comes first, right?
Yes.
So you
Yes.
start with the companies. You're gonna get a lot of investors in your platform. Where you start. Typically, you start on the supply side, which is in our case companies. So we started getting the first companies on the platform. And basically promote those and then attract investors. But getting through that chicken and egg marketplace sort of challenge, that was definitely also quite some work.
Wonderful. This chicken and egg reminds me, the further challenge which you have. I feel that this chicken and egg story, it is going to lead me to ask you the journey further. Okay, when you go ahead, are you going to catch hold of those eggs first or the chicken first?
Yeah.
So, in simple terms, where do you see your journey going from here?
Yeah.
What do you want to do? You want to expand on the investor side, or you want to expand on the startup or the founder side? Which one do you think you want to bring them aggressively on the platform,
Yeah.
or do you think a perfect balance on both sides of your marketplace and bringing them in a balanced way in your marketplace, or your curated marketplace is the best way?
Mhm.
So what I want to ask you is that how are you going to grow further your business to the next level, and how do you visualize your journey from here going ahead?
Yeah. So we've done now over 175 successful campaigns, and so we've shown that we can execute. We've
Right.
got a community of 50,000 investors. So we have a story to tell. We demonstrated that it works. So we're really at this stage, or in the stage of scaling up the business, scaling up the platform. And that basically means obviously continue to attract exciting companies to bring to the platform. So really ramping up and getting sort of entrenched in the startup ecosystem in the private market in general, and really becoming a viable established party. So hey, if you're raising capital, yeah, and explore raising through Frontfundr, right? So increase really growing the number of deals of capital raise on the platform, and of course on the back of those deals, we always, the investor base is continually growing.
Right.
But it's almost like in the
Right.
beginning, we said, look, we started this shop in Main Street. Nobody ever heard about the shop, and we can make a lot of noise about where the shop is and put a big sign on it, but if there's nothing in the shop window, who cares, right? So we started putting these companies in the shop window. That's how we started.
Right.
So
Right.
now we've shown that like we can execute, and so the word is getting out there. Like there's this shop in Main Street, Frontfundr. Check it out. You can actually invest in private companies.
Wow.
So now are the stage where we should also where we can promote the shop itself. So in terms of growing the investor base, we can obviously do that again on the back of more deals on the platform, but also by telling the Frontfundr story and saying, hey, this is an opportunity for you to actually invest in private companies as well. So it continues to be both sides. There's no particular side is leading, but it's now really that we're now at the stage to ramping up. We're already the leading platform in Canada,
Right.
so we obviously want to solidify and build that out with additional service offerings both to companies and investors, and of course we're looking for international opportunities as well.
Awesome. Awesome. So, what I have understood is that you want to attract some nice companies, some good companies who are providing the right kind of solutions. Maybe in the what do you call the spaces like consumer tech, retail spaces, med tech, health tech spaces, and those attractive companies which are providing good solutions, and these attractive companies who are garnering or attracting right kind of customers, you're going to bring them on the platform. So once these attractive and good companies who are revenue generating, they come on the platform at whatever stage it is, series A or the later stages, and you have your investors, and when they find value in these companies, they make money, and more investors come in, and the stickiness comes. That's a lovely journey which you are charting for yourself for. Wonderful. Yeah.
That's
You,
actually that's a great comment. Actually, reminds me of this is that, and that's what excites me on what we deliver to investors. I
yes.
mean, obviously, we're a company. When we do more business, grow and more investments through the platform is more revenues for us.
Right.
But the cool thing here is that this is not just about how do we sell as much as possible to an existing
Yeah.
investor, but we enable investors to create a portfolio, even if let's say they have to invest. They are able to have a $10,000 on an annual basis. They can invest in private companies through Frontfundr. They could make 20 investments. They can create a portfolio. So
Wow.
I rather have an investor coming back 20 times
Right.
and make small investments because I got much more engagement, stickiness, as you call it, and rather than just once. So I really have a repeat investor on the platform. Secondly, an investor is doing that in his or her own interest
Right.
because diversifying the portfolio within the private market. So making 20 investments across different startups. We all know that startups fail a particular proportion, right? So diversifying, spreading the risk. We support that. So that excites me that it's per definition coming back for investors to come back to Frontfundr and make multiple investments is also good for them.
Yeah. Before I, ask you the last couple of questions, I have one question from our investors. The question is, what is the minimum, or maybe you can quantify that amount, minimum or the maximum amount which an investor can invest in one single company or in total? And what is his exit plan? When can he exit? Can he exit in a year, in a day,
Yeah.
3 months,
Yeah.
4 months, 3 years? So just these two questions
Yeah.
before I move
Yeah,
on.
and they're great question, important question. So the first one, how much can an investor invest? So without getting in the sort of regulatory nitty gritty, but
Right.
is that we Frontfundr operates as a fully registered dealer. That's why in the beginning I went through all the hassle with the securities regulation. So we're a fully regulated platform, and we
Right.
can use all capital raising rules in the private markets. And so that means that our platform basically recognizes whether you are a smaller retail investor or you're perhaps a larger accredited investor. Now the investment limits depends on how you're qualified through our platform, and because then the platform, this is all automated, recognizes which capital raise to use. So if you're a smaller retail investor, there's typically a limit of around $2,500 to $5,000
Right.
that you can invest in one startup. If
Okay.
you're a credit investor, there are typically no limits.
Okay.
Right, so you can invest as much as you want. So it depends on that. And then
Right.
for each investment, because we are operating as a so-called exempt market dealer, an EMD, each trade, each investment goes through an automated process of know your customer,
Right.
KYC, and
KYC.
suitability.
Right.
But it happens all in a split second. Like just to give you an idea, rule, if even a first time investor on Frontfundr, you can sign up, and if you want, you can actually complete an investment in as little as 10 minutes. Done from initial onboarding, KYC, completing the investment, signing investment documentation, the suitability that happens all
Super.
automatically,
Super.
transfer of funds. So it's all so we make it
Amazing.
as easy as possible. So that's the first one. Is it depends really on what kind of investor, how much you can invest in a particular company. Your second question, very important. How do I get out?
Yeah.
So the the message here is it's typically a long haul flight. You got to be patient. So
Okay.
there's no secondary liquidity, or at
Right.
least not yet.
Okay.
And so you typically, and this is also what we want to make sure investors understand, the investment horizon is typically between easily 3, 5 to 10 years.
Okay.
And so how you typically get out or exit for an investor is when the company is successfully sold, acquired,
Mhm.
or company goes public.
Right.
But yeah, that's typically 5 to 10 years that you need to think of, and there's obviously certain ideas to facilitate certain secondary liquidity, but it will in the foreseeable future certainly not be like a public markets, like I buy one day and I sell the other day. And that shouldn't also be the purpose, right? You want to invest in a startup, you want to invest in a company because you believe in the company, then you need to give this company the time to grow their business and then successfully exit. But then if it's a success, it could be of course a significant multiple on your investment.
Wonderful. So nice. Thank you so much, Peter. You have had an amazing journey, and your plans are so crystal clear. The way you want to grow your company going forward. I wish you good luck, Peter. All the best to you and Front Funder.
Thanks, Rahul. Thanks very much. Thanks
All the
for having
best.
me.
Yeah.